challenges facing the U.S. long-term care insurance market show no signs of slowing, with AM Best outlook for the segment remaining at negative. According to a newly issued AM Best report, the combined impact from rising claims costs and the inadequate pricing assumptions from the past continue to complicate the playing field for writers of this product. We're joined today by two analysts who helped co-author AM Best's recent analytical report on the subject. Associate Director Michael Adams and Industry Research Analyst Kaitlin Piasecki. And Kaitlin, long-term writers did really well during the pandemic. Claims down by some 13% or so. What's happened since that time?
So, as you said, claims were down by 13% during COVID. However, at the end of 2022, they increased by 20%. And driving this was really the shift from home care back to long-term care facilities. And then also adding to that was inflation and the cost of medical supplies rising. And then also you have the cost of higher wages as well, all attributing to that.
Mike, how are the legacy blocks of long-term care business affecting the segment's financial performance?
Yeah, John. So the older legacy blocks of business have been a real drag on the segment's financial performance. Many carriers began exiting the LTC business over a decade ago as actual experience began to deviate from their initial assumptions. So LTC requires numerous long-term assumptions. This includes interest rates, expenses, policyholder experience, just to name a few. And insurers are really required to update these assumptions as a new experience comes through. And this did result in some significant reserve charges at times. We found is policies that were sold in 2004 and prior were written when interest rates were much higher, and where LTC insurers they had a limited historical experience to base their assumptions on. So in addition, they had much richer benefits, such as unlimited benefit periods, compound inflation riders. So as a result, our research shows that these blocks incurred loss ratios that were significantly higher than those policies that were issued in 2013 and after.
How have the companies writing this business responded?
So companies have taken a number of steps to improve the profitability of their LTC blocks. They stopped selling policies with these unlimited benefit periods and these compound inflation riders. They applied for significant rate increases, sometimes as high as 60% over a 2 or 3 year period, arguing that they could go insolvent with regulators if they didn't get these rate increases. They also offered to pay policyholders a lump sum if they agreed to reduce the amount of benefits in their policies. And while this did come at a cost to some insurers, it did reduce some of the uncertainty for them on a go-forward basis. And some insurers did have success with this. And then finally, more recently, as insurers really began to search for ways to improve the profitability of their block of business, they began to focus more on fraud, waste, and abuse, and preventative care measures such as doing a safety audits of policyholders' homes, doing things like installing handrails in their showers, making sure they have friends or family members coming by every so often to check in on them. And these programs have begun to show some initial success, and they may delay the unnecessary claims for months or potentially years, which could benefit both the policyholder and the insurer.
Kaitlin, the report also discusses a state-level move by the state of Washington to provide residents with long-term care coverage. What is the results of that been?
So Washington is the first state to actually implement this mandatory payroll tax to its residents. And although this is a mandatory tax, there were a few exemptions. One of the exemptions being that if somebody could prove that they had private long-term care insurance, then they would be exempt. but they had to have that private long-term care insurance prior to November 1st of 2021 in order for them to be exempt. So as a result of that, we saw the number of lives being insured with long-term care in 2021 spike in 2021.
Thanks, Kaitlin. Mike? That was Associate Director Mike Adams and Industry Research Analyst Kaitlin Piasecki. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.